Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This documentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. Okay, I believe that there is some audio problem. Okay, let me check. Okay. Okay, so my apologies. All right, so let me do okay, my apologies. Let me restart the thing again because it seems to me that there is some audio issue right now. Okay, do let me sign again. Test 1 2 3. Okay, great. So I believe that the audio is all good. So briefly, let's have a recap on the disclaimer slides again. So before we kickstart this we call it the daily dose of market insight. So leverage trading carries a high degree of risk and may not be suitable for everyone. And as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So in a nutshell, basically this is what the gist of the daily dose of market insight will be. Okay, so it's a recap of what happened last night in the US session especially, and as well as its impact on the global financial market. So now let me share with you something very interesting. What we see last night over here was the release of this all-important US University Megan consumer sentiment. So this is the finalized reading for the month of November. So we could see over here is that consumer sentiment continued to dip at 61.3. So this is actually the lowest so far since June. Okay, since June. And what we could see over here is that the earlier pickup in the sentiment in the month of September seems to be dissipated. And what's interesting over here is that the survey results start to show that 1 year ahead inflation expectation survey has started to pick up significantly at 4.5%, and even from a 5-year forward-looking inflation expectation as per survey has started to tick up significantly as well at 3.2%. So this is pretty much of a high reading in terms of inflationary expectation. But however, that doesn't deter the ongoing positive seasonality that is being reflected on the US benchmark stock indices. So the US benchmark stock indices continue to be in a bullish tone yesterday. The S&P 500 rallied by 0.41%, followed by the Nasdaq 100 0.43%, the Dow Jones Industrial Average 0.5%, and the Russell 0.69%. All right. So right now we could see over here is that market are still expecting a dovish tilt by the US Federal Reserve in the next upcoming FOMC meeting, despite the fact that we see a consumer survey-based inflation expectation tick up that I expressed earlier shown you all earlier on the US University Michigan survey reading. So in the upcoming 13th of December, we think very low chance of another interest rate hike. I would say very low chance of an interest rate hike because market is expecting Fed to stay pat at 99.7%. That means, i.e., market is expecting the current interest rate hike cycle has peaked with a terminal rate of 5.25% and 5.5%. So if you look at the accumulated probabilities across the various meetings next year, in terms of the hike percentage, is still very low throughout 2024. So at less than 10% chance, you see over here, less than 10% chance of another hike. So market now has started to even price in very close to 30% chance, to be precise, 27.4% chance of the first interest rate cut to come in as early as March next year, FOMC meeting. So what we could see over here is a significant tilt towards a much, we call it a dovish tilt towards by market expectation for the Fed to actually start to cut as early as March next year, and that actually causes the US 10-year Treasury yield to continue to remain lackluster below the 20 and the 50-day moving average. Okay, even though they traded sideways yesterday. So that actually kind of supports the ongoing dollar weakness, and as well as the ongoing bullish tone that is being seen on the US market yesterday and start to take it out globally as well. Okay, so now let's immediately jump down to the technical outlook on the global asset classes, starting from the benchmark US stock indices first. Okay, so now let me hide myself so that you can actually focus more on the screen instead. Okay, so now let us start with the benchmark US stock index. Okay, so despite the fact that, okay, you all know that NVIDIA yesterday has a meeting, NVIDIA has a what I call earnings announcement yesterday. Yes, even though the exposed earnings impact on the share price is negative, so NVIDIA closed down negative 2.46% yesterday. Its all-time high was recently met on Monday at 505.48, but it's still holding above the intermediate support at 468.06 and also holding above the upward sloping 20-day moving average. So indicating to us that its medium-term uptrend that is in place since the low of 31st of October remains intact. Okay, why NVIDIA is important? Because NVIDIA is the fourth biggest weighted component stock inside the S&P 500 and the Nasdaq 100. Okay, so now let's immediately dive down to the Nasdaq 100 short-term technical. So you could see over here is that the Nasdaq 100 yesterday, within our expectation, pierced up and hit the first resistance level as we highlighted at the start of this week, 16,160, before it traded sideways, holding above the intermediate support at 15,915. I do not want to use 15,915 to put it so tight, so we will be still using 15,765/15,690 as my key short-term pivotal support level to maintain this short-term bullish outlook on the Nasdaq 100, looking forward towards the next resistance to come in at 16,310. But however, a breakdown below 15,690, that means an hourly close below 15,690, potentially sees the start of a corrective pullback to test the next support level at 15,380, with so confluence with the upward sloping 20-day moving average as well. Okay, now flipping on to the Dow Jones Industrial Average, which is the Wall Street 30 we call in our platform. The Wall Street 30 going to inch up much higher, hit the first resistance as expected, 35,295, holding above the intermediate support at 35,055. So as usual, I don't want to make it so tight. So 34,790, and so given the fact that right now we are heading towards a low liquidity trading environment in the US stock market. Why? Because on Friday, the US stock market will close half day due to Thanksgiving holiday. As we know that lower liquidity tends to lead to higher volatility environment potentially. So I do not want to put the pivot so tight. So to prevent any more unnecessary whipsaw. So 34,790 will still be the key short-term pivotal support on the Dow Jones Industrial Average, i.e. US Wall Street 30, looking for the next resistance to come in at 35,830. But however, if we start to see an hourly close and a breakdown below 34,790, then we will say that this short-term bullish outlook will be invalidated to see the start of a corrective pullback towards the next support level at 34,385/34,190, which confluence with the 20-day moving average and as well as the pullback support of this former descending channel resistance that was taken out recently on last Tuesday. Okay, so that's for the Dow Jones Industrial Average. Moving on will be the German 30. So for the German 30, it continued to inch much higher after that, during the mid of the US session, it started to trade sideways. So I will tidy up the key short-term pivotal support to bring it towards this Monday swing low area that confluence with last Tuesday swing high area, which is at 15,860, and also very closely, slightly above the median line of this short-term ascending channel that is in place since 30th of October. So still looking for this short-term bullish bias with the next resistance coming in at 16,050. Above it takes us much higher towards 16,240. But however, if we start to see a breakdown below 15,860 and hourly close below it, potentially we may start to see the start of a minor corrective pullback to retest the lower boundary of this minor ascending channel support. I think as a support level at 15,660/15,560 is a zone which also confluence with the 200-day moving average. Okay, moving on to Asia, the Hong Kong 33 index, which is the Hang Seng index. Yesterday, we have a bit of a call excess at the short-term pivotal support, which is at 17,700/17,600. Price action indeed tested earlier this morning, which is also confluence the 200-day moving average before shaping a rebound. So for today, I will actually put a kind of an upside trigger level, which is currently this week swing high area. Okay, which is Wednesday swing high area at 17,810. So a break above 17,810 potentially could take us up or expose the next intermediate resistance level at 18,080, which was last Tuesday swing high level. Okay, but however, if we start to see an hourly close below 17,600, then this bullish bias will be invalidated to see a squeeze down to retest this minor ascending trend line support that is in place since 24th of October low, now acting as a support level at 17,300. Okay, now moving on, next will be the Nikkei 225. So the Nikkei 225 continue to be trading in a bullish bias with the RSI inching upwards above the 50% level, we will see. So indicate to us that this short-term bullish momentum still remains intact on the Japan 225. So I will actually tighten the key short-term pivotal support for today, 33,100, which is also the pullback level of this former medium descending trend line from June 2023 high, and also very closely to the short-term ascending channel support that is in place since 8th of November. So as long as this level holds 33,100, potentially we could see a test of 33,825 breakout, take us up higher towards 33,410, which is confluence with the one-time Fibo extension that I draw from the low of 30th of October, project it to the high of 4th of November, taking down towards the low of 8th of November that I draw over here, and also correspond to the upper limit of this minor ascending channel. However, an hourly close below 33,100 will invalidate this short-term bullish outlook on the Japan 225 to see the start of a minor corrective pullback towards the 20 and the 50-day moving average, acting as a support level at 32,490/32,260. Okay, so now moving on quickly will be the FX market. So let's start with the dollar yen first. So very interestingly, dollar yen, if you recall those at the start, we advocate this potential corrective pullback, which is the minor counter trend rebound scenario. So minor counter trend rebound scenario actually made our resistance at 49.20, and if we do the Fibo retracement, it actually stopped right at the 61.8 level. All right, that I draw from here, and also close to the 50-day moving average. And what's interesting over here is that the hourly RSI, after storing close to the 61.8% Fibo retracement, it started to shape a lower high right at the overbought zone, which indicates to us that this is a bearish divergence condition on the RSI, indicating to us there's a high odds that this minor counter trend rally may have made its terminal level. That means signs of what I call bullish exhaustion, where potentially the short-term bearish trend could actually resume around at this congestion level, around at this juncture. So I don't want to put it so tight using yesterday's swing high at 49.75. I'll be putting slightly higher at 150.20 as my key short-term pivotal resistance for today, which confluence with this minor swing low, a former minor swing low area of 15th of November, as well as the 20-day moving average now also acting as a resistance at 150.20. So as long as 150.20 holds, we'll be flipping to a short-term bearish bias on the dollar yen, looking for it to retest 148.40, break down, take us down towards the swing low area of last this week, this Monday, which is at 147.45. But however, if we have an hourly close above 150.20, then this short-term uptrend of the dollar yen will be invalidated to see a massive move with a squeeze up towards 151.40 resistance level, which is the minor swing high of 16th of November this year. Okay, so that's for the dollar yen. No change for the Aussie dollar. So we look at the Aussie dollar, still continue to hovers in a sideways range between 65.95 and 65.20. So we will still be using, and the RSI is the middle of nowhere. It hasn't hit the oversold region yet. So we will be still having this short-term neutral stance on the Aussie dollar between 65.95 and 65.20 for today. Okay, now moving on to the European currency. So for the European currency, let's start with the sterling dollar. So on the sterling dollar, it actually rebounded right at the short-term pivotal support that we highlighted since the start of this week, 124.40, also confluence with the 20-day moving average. So no change. We will still be having this short-term bullish outlook on the sterling dollar, looking for the next resistance to come in at 125.40. So 125.40 is the upper limit of this ascending channels channel that I draw from the low of 1st of November, as well as confluence with the 50% Fibo retracement of the previous down move from the high of 13th of July all the way down to 3rd of October this year. But however, if we start to see an hourly close below 124.40, then this short-term bullish outlook on the sterling dollar will be invalidated to see a start of a minor corrective pullback towards 123.75 and potentially even 123 figure level, which confluence with the lower limit of this minor ascending channel for 1st of November and confluence with the 20-day moving average, acting as a support level as well, which is confluencing at the 123 figure level. So that's for the sterling dollar. Now moving on, this will be the euro dollar. So the euro dollar did a bit of a push now, but however, it managed to help above the former swing, the current swing low of 15th of November and 17th of November, as well as the upper limit of this short-term ascending channel that I draw from 2nd of November, and also above the 200-day moving average. So I'll be using 108.30 as my key short-term pivotal support for today, looking for the euro dollars to still maintaining its short-term bullish bias. But however, it got to break above this week high. This week current high, swing high, will be at 1.0920. A break above 1.0920 give us much more prudence to test the next intermediate support at 1.099. However, if we start to see an hourly close below 1.0830, then this short-term bullish outlook will be invalidated to see the start of this minor corrective pullback to test the next intermediate support zone at 1.0750/1.0720. We also confluence with this upward sloping 20-day moving average. Okay, so that's for the euro dollar outlook. So now moving on will be the commodities market. So over here is the commodity market. Let's start with oil price first. So as you all know that oil prices yesterday did a very messy movement, given the fact that over here, let me share with you all what happened to oil price. So actually, what you could see in my screen over here, this is the news outlook. Okay, there's a news flow over here. So stating that actually within OPEC members, there's actually some dispute going on. And instead of having what we call it the intended meeting on 26th of November, which is this Sunday, they push it back to the 30th of November due to the African nation is unhappy with the revised production limit. So this being the fact that means, i.e., that intended what I call extended supply cuts that to be extended in the early half of 2024 may be in jeopardy. So that caused the crude oil price to actually plunge yesterday, -4%. So now let's see what's the technical outlook for the crude oil. So this was what happened yesterday over here, the earlier plunge. Okay, but it actually ended much more positive yesterday, but still holding below the 200-day moving average. This is the daily chart of the West Texas oil. Okay, Bitcoin our platform. So in fact, these prices is taken into account of the WTI futures. Okay, so if you look at the hourly outlook from now, so hourly outlook very likely it will be in a very messy configuration. So for the short-term outlook on WTI crude oil price, so this is the hourly chart, okay, on the WTI crude oil price. So we were having more of a neutrality stance between the 200-day moving average now acting as a resistance at 78.10, and also the medium-term range support at 72.70/240. So given the effect of this uncertainty among the potential disagreement on future production cuts within OPEC Plus members, so there will be much more what I call a fluctuation or gyration between the crude oil prices. So we still prefer to have a wide neutrality stance between 78.10 and 72.70/7240 as we head into the OPEC Plus meeting next week instead. Okay, now moving on, next will be the spot gold. So spot gold continue to be bullish. What we could see over here yesterday, it retested the intermediate resistance at 2006 before coming down and still holding above the 20-day moving average. So I do not want to tie it so tightly at 1984. So still using 1972 as my key short-term pivotal support level to maintain this short-term bullish outlook on spot gold. So that is XAU / USD. Still looking for a retest towards 2006, a break above 2006 potentially sees the next intermediate resistance zone coming in at 2028, 2037. However, if we start to see a breakdown below 1972, potentially could see the start of another choppy corrective pullback towards 1957. A break below 1957 take us down towards the 200-day moving average, again acting as a support at 1932. Okay, so still maintaining that short-term bullish outlook on gold as long as 1972 key short-term pivotal support holds. Okay, now moving on, next will be what are the key highlights to look out for today in terms of economic event. So today will be Wednesday and Thursday. So on Thursday today, we'll be looking at this a release of flash PMI data for November in terms of manufacturing and services that is released in Eurozone at 5 p.m. Singapore time, then followed by UK at 5:30 p.m. as well. All right, 5:30 p.m. as well. So in fact, if you were to let me put the impact again. In fact, in US as well, they will be releasing. Okay, so no release in US because no release in US due to a shortened Thanksgiving holiday. So only UK at 5:30 p.m. and US one, US will be released on Friday instead. All right, for the flash manufacturing and services PMI data for the developed economies. Okay, so with that, thank you for your time. So this is the key market insights that I share with you for today, and we shall speak again tomorrow. Thank you.